Okay. Again, thank you for joining. I'm going to be talking about the controllables in the insurance industry. And really, this doesn't just affect your premiums. It's helping you control your business and run an effective business and a safe business. And I think that's all something that we want to do. So, of course, insurance premiums are important, but having a safe, efficient, effective business, I think, is more effective to everyone. So here's a spoiler alert. So if you want to take a picture and leave, I understand. But these aren't the only things that affect your premiums, but they do play a very big part in it. It's really important to understand the environment and understand what is needed and how insurance premiums are calculated. And then what information is needed for the insurance carriers. What do they want to see? And how do they want to see it? Claims and loss control, both very big factors when you're sending in a submission, how to handle claims, what safety measures should be put in place. And then when you're working with your broker, setting up a game plan annually. Are you going to market? Are you not going to market? What's changed in your business? And we can get into all of that. So first you want to talk about generally annually what the insurance climate is doing as a whole. And these are 5 factors that are currently happening in the business, and they will change annually. One of the biggest things is that businesses are aware of different types of risks that are happening. So 10 to 15 years ago, you might not have heard of cyber insurance. And it might be something that was new and cool and your broker was selling to you. But now it's something that's pretty essential. And you'll see big breaches when it comes to Target or school systems, hospitals, but you'll also see breaches and hacking at very low levels, very small businesses. And that's something to think about. If you're hacked or you have a breach, how is your business continuing? If your system is locked, what are the processes that you're doing to continue your business? Other things like rate decreases, rate increases, that's going to depend on the line of business. So that we're seeing some decreases in some lines, but also struggles and challenges. As you'll see right now in the auto and excess umbrella lines of business, there are some increases occurring. This isn't across the board, right? Every business is different. You may have 2 or 3 large workers' comp claims, and that's where you're seeing increases. So again, just know when you see a marketplace type of review that it's as a whole and not just you specifically. So when we're talking about just your business, these are questions that you want to ask yourself and discuss with your broker. So you want to go line by line. Like I just said, okay, maybe we're struggling with workers' comp. Let's talk about, should we be marketing that line this year to different carriers? Is there a claim that we need to be discussing? What claims are occurring that we need to put safety measures in to stop them from occurring? And then what should we expect from the current carrier? We should be talking to those carriers at least 120 days prior to renewal, and they should be giving us an expectation for renewal. Is there a chance that they're non-renewing because they're coming out of the market or there's a large claim on the account that we need to discuss with them? Is there an exclusion on the policy that is concerning? I like to have what if conversations with the client. What if there's a fire in the building? What are you doing to relocate? What if there's a large workers' comp claim or an auto accident? What can we do to prevent those things? And then carriers entering and exiting the marketplace. We see it every year. There's carriers that will come into the real estate market or the contractors market, but they'll only be writing certain lines of business. So we need to talk about that. Or they've told us up front that, hey, we are not going to be writing this line of business this year, so we need to find another avenue for that line. And can the carrier provide an indication at renewal? Typically, this can happen again, 90 days prior to renewal. Can they give you an exact figure? Usually not. And it's going to depend on, of course, all the things I'm discussing: claims, loss control. How about your exposures? Did your payroll go up? Did your revenue go up? Did you change something in your business? So they're good to have preliminary conversations with your carrier in order to decide whether maybe possibly marketing that year or staying put. So of course, there's several factors that go into influencing your premium, and some of them are relatively self-explanatory. But you really want to look into every measure that is included in influencing your premium. So there's things like property value and your equipment value, your location. Of course, things possibly in Baltimore City may have a higher rate than something like our friend Dan in Cumberland, as you can imagine. We've had some real estate recently that the carrier is really looking into high crime rates. Construction quality, of course, is there fire resistant materials? Newer materials are going to be lower premiums than older structure at older and poorly constructed structures. So again, with that, you're not only going to have a higher premium, you'll most likely have less carriers attracted to that. So the more you can do with all of these elements to influence and attract the carrier, the better. Of course, security measures, we'll talk deeply about that when it comes to claims and loss control. We want everything in place, and we need to make sure we communicate that to the carrier. Past claims, how are we dealing with them? Are we discussing them routinely with the carrier? Coverage limits, another thing good to review every year. If your business is growing, is the limit adequate? And yes, possibly your premium could go up with a higher limit or not. Maybe another carrier can do the same limit, a higher limit at the same premium. So these are all things that kind of go into constructing your premium. So again, just keep them in mind. So a lot of times clients or prospects will come to me and say, I haven't had a claim. I have all of these safety measures in place. We're a well-run business. Why is my rate going up? And there are times when it has nothing to do with you, right? The interest rates are going up. We know about inflation. There was just an election. Supply chains. There was major LA fires. Catastrophes of that sort will absolutely influence the insurance market and could significantly increase premiums across the board. So there are things to keep in mind. So if you're getting those 2 to 5% increases just due to inflation, you know that building materials are going up. You know it's hitting you when you go to the food store. So insurance is really not that different. So calculating costs, really what goes into calculating your insurance premium? First, we do a risk, the carrier will do a risk assessment. And I kind of describe that as the triage of insurance, the what, where, and why. And that's just really providing all your information to them. Who you are, how old things are, equipment schedules, vehicle schedules, claim history, everything they need to kind of dissect your account. And then it's going to go into underwriting and actuarial. So then they'll do studies that show the likelihood of a claim occurring. I will say that an actuary is usually far smarter than I am, and there's mathematical statistics around that and things of that sort. But they do study like businesses and help determine these types of rates. There's also regulatory compliance. Some carriers have minimum premiums, so that's something to look at when if your account is being marketed. Is there a $20,000 minimum premium? Do we really need to go there? What are the market conditions? What are the economical trends that are occurring? And then adjustments and discounts. And this is important. So if you have, I don't know, 5 or 6 policies, is there a way to bundle the policies? Can we get the property, the general liability, possibly the umbrella all in one policy? I'm sure you're aware on like your homeowners and your auto that you would get a discount for that. But right now there's companies out there that have 6 separate policies and they can be combined. We want to pay attention to the limits when we do combine them to make sure they have separate limits. But when bundling is an option, it's highly recommended. Again, on the management liability, we can bundle them as well for the directors and officers, employment practices, crime, and then cyber, of course, which I can talk about all day. But if there's any type of professional liability and it can be combined with the cyber, again, highly recommended. So I wanted to talk about kind of digging into claims. Of course, claims history is extremely important. We want to pay attention, and carriers will point out frequency and severity of claims. So if there is a frequency on your loss run, they're going to question that. And that's something we want to take a proactive approach to. Why are these claims occurring, and what are we doing to prevent them going forward? The carrier is going to want to see that up front. They're going to ask all day long. When it comes to severity, that's important too. So a lot of the loss runs will provide maybe a sentence or two about the claim. And we want to give more of a description if it's obviously in our favor. We just recently had a unfortunate fatality claim with a client, and it was just a medical emergency in an auto, which is less frequent than, an auto accident when somebody has distracted driving or something of that sort. We want to give that information to the carrier so they're aware of that. So it doesn't affect the premium as much as some type of distracted driving or something of that sort. So if you don't have any claims, that's fantastic. And if you do, here are some of the common ones that we find in commercial lines. And I bring this up because if you don't have any, I like to go through them and say, okay, is burglary or theft, is that something that could occur in your business? And what is in place to prevent that from happening? Water and freezing pipes. We see it a lot. About 4 or 5 years ago, when there was a deep freeze on Christmas Eve, I believe, we had a ton of freezing pipe claims. What can be done there to prevent that from happening? Fires, of course, third-party damages. If you have slips and falls, of course, they're going to be one of the most common as well. So again, I go through all these. I like to tell a story. I like to say the what if. When it comes to workers' comp claims, what can we do to prevent, employees from falling and getting hurt, or when they're climbing a ladder, or what type of equipment are they using in order to prevent these things? Some ways to control the claim costs. So if you have claims on your account, you should be reviewing them biannually, or I'd say quarterly. So you can do that with your broker and they can set up a call with the carrier, or you can contact the carrier direct. Typically the broker can help facilitate it, but there'll be an adjuster on the claim to help facilitate. It's important to keep claims moving. You don't just want them sitting on your account. No one's working them. Have they been settled? Have they been closed? Are they still open? Again, with the frequency claims, what's happening with them? If there's not at fault claims, we want to talk about a narrative about that. What occurred there? Again, the carrier is going to want to know that, and you're going to want to point out that these claims, while they are on our loss run, they're not our fault. And then again, what are we doing to prevent all of these from happening? So this is a little more specific. It's really targeted to workers' compensation, and it's called your experience modification rate. So this is a rate that is associated with your past claims, typically the past 3 years. And not everyone has an experience mod. So it's not going to be for a startup company. You're going to have to be established for a few years in order to have a claims history. And then typically you'll have premiums $3,000 and above in order to have one. You'll see it more in the construction contractor world, very, very important to them. A 1 is indicating that your company's claim history is pretty average and you're okay there. What's going to help on your premium is when you are below the average. So if you are below a 1 and your experience mod is below a 1, you will get a discount on your insurance premium. If you are above a 1, you will get a credit on your, and your premium will be higher. So you will see that it, as I mentioned, in the construction contractor world, that the experience mod could almost make or break you. You could almost not get a job if you're over a 1 or if you have a high experience mod. It's showing your reputation when it comes to safety, and you possibly could not get a bid because of a high experience mod. So while all companies should pay attention to it, when you're in the construction contractor world and losing business, you're definitely more focused on it. So loss control. Again, this is another aspect of what goes into providing an insurance program. It's going to go into your story. Here are some examples of different loss control items on here. But again, there will be inspections typically of your business, and someone will come through and take a look when it comes to fire safety, when it comes to slip and falls, any type of manuals, defensive driving, anti-theft devices. They're going to see employee handbooks. Carriers typically will ask for a lot of these things, and the more you have of it, the better, and will ultimately help with not only just keeping your company safe, but it will also help with your insurance premium as well. Again, what I like to do when there is a loss control inspection requested, I'd like to find out from the carrier what is needed. I typically go out with a client and take and do the inspection with them, and I like to know, carrier, what are you looking for? Are we looking for fire safety? Are we looking for driving manuals? Please let us know up front so we can be prepared. And typically after the inspection, the carrier will give you recommendations. Some are easies. Some the carrier can easily help you, give you recommendations on how to put them in place. And then other things like, okay, your building is unsprinklered. They're a little more difficult, but again, an unsprinkler building is going to most likely have a higher premium than a sprinkler building. So one of the biggest things is to have a game plan in place with your broker. So I'd like to start this at least 6 months prior to renewal and discuss changes in your operations. What is our game plan? Are we with a carrier that we trust? They're covering all elements of our insurance. We think that we have a very competitive premium with them. A lot of times, if we're in a market that has limited carriers, do we really want to market it and lose that carrier? Are there claim issues on the account that we need to discuss to kind of resolve prior to renewal? And if we are going to market, what carriers are we marketing to? And are there ever any service issues when it comes to the carriers? A lot of the insurance carriers will offer all types of trainings that can assist with employee trainings or third-party trainings, anything you can think of that you want to have access to. So when we speak to these carriers up front, we want to know that we'd like to know what's available. So the documents that we need in order to have an organized, comprehensive submission, which is incredibly important. So a lot of times, brokers will send in to the carrier some applications, maybe loss runs, and it doesn't show the true picture of your business. When the carrier has to constantly come back to us with questions, they're kind of putting your account on the side. So we don't want that lag time. We want them to have all the information up front, comprehensive. If there's claims, what are we doing about it? Not only just the applications and the loss runs, we want a narrative of your operations. What's being done day to day? What trainings are in place? What safety procedures are in place? So it's taking your submission to the top of the list rather just in the pile when the carrier is saying, okay, well, I don't have loss runs, or I looked at the website and I have questions about this. You also want to make sure that your website is updated. We've had some prospects lately where they go on the website and they're saying, okay, we see this restaurant is open past midnight. That's a concern to us. When we know from the client that no, we're not open past midnight, but the carrier is going off of what they're seeing. Or there's some, it's an auto repair stuff shop and they're offering 24/7 towing. And we go back to the client, they say, no, we really don't offer that anymore. Make sure those things are updated on your website because it's one of the first things that the carrier looks at. We also want to make sure that we're providing current loss runs to the carrier, so seeing the status of the claim currently. And if you have any subcontracts with any vendors or things of that sort, we want to provide them as well for insurance wording. So the market response, when we as a broker go out to market, it's important for us to let you know where we went, if a carrier quoted, if they declined, and the reasoning for the declination. So if the reasoning is the building was unsprinkled, or this safety measure was not in place, or it's just not in their appetite, it's important for us to know so we can push back possibly and say, well, wait a minute, like this safety procedure is in place. We'd like to show you, and we'd like you to take another look. It's also important to have a quote comparison if we have 2 or more carriers, and we can use that as leverage, right? So when we're showing all the loss control and we're showing everything that you have in place, you're a more attractive risk, and we can find more quotes for you and use one quote against another. As I mentioned, it is a process, and we like to start it at least 90 to 120 days prior to renewal. The reason why this is going to help with your premium is because if you start 30 days prior to renewal and you rush through it and a carrier is not prepared to quote it, and you end up getting one quote because you've started so late, you're stuck. So we really need to start 130 days, gather the information, provide the narrative, have the discussion with you on what we're expecting for renewal. So there's no surprises the week, 2 weeks before renewal. When you're stuck with a premium, we know what to expect. We've already had that discussion. Then no later than 2 weeks prior to renewal, everything should be put into place. Certificates should be issued. Anything that you need at binding should be done. Typically, a carrier will not release a quote more than 30 days prior to renewal. So you're not going to get your renewal usually like 2 months ahead of time, unless there's some special circumstance. So typically a month before renewal, they'll provide a quote as long as we've gotten your information, we've provided to the market efficiently. And then we can review it, go back to them with any concerns, and provide it in a timely manner. So just in conclusion, I think, it's a process, right? It's not easy. It's not just here's how we got your insurance quote, and this is why the premium went up or down. It's really important to dissect the entire process. Understanding what the climate is internally and externally, reviewing your policies annually. Is there another policy that needs to be written because you have a new exposure? Is there a limit that needs to be increased because you have a new contract with someone and they require possibly like a $5 million umbrella? So always stay involved in the claims process, move claims along. If there's a large claim that possibly happened 6 years ago, so typically carriers look at claims for 3 to 5 years and that claim has fallen off, you may be attracted to more carriers and your premium could be down because now that claim is gone. Be proactive with everything. Put those security things in place, put the processes, the handbooks, everything to avoid claims. And again, so your business will be run better, and have pre-renewal discussions with your broker to develop that game plan for renewal. And with that, that's all I have. I'd be happy to, if anyone has any questions, we can open it to questions. Clay?
Yeah, I was monitoring chat and I didn't see any come through during the presentation, but offers a great time for anyone that heard something they might want more information on right now to drop a question in chat. And I'm kind of stalling. We can also unmute if you want to ask questions.
Oh, okay, Clay and Jamie, I have a question.
Yeah.
Jamie, is it true that if an employer with, say, a construction company offers supplemental accident insurance to cover the employees, can they expect maybe a reduction in workers' comp claims because of that?
So what do you mean by supplemental accident?
Well, such as what Aflac offers, where
okay.
if the accident insurance would pay the insured person cash if they have an injury, and they would get that money to help with whatever they need, whether it's on the job or at home. And I've seen some advertising that said surveys have shown that if the employees have that, then some of them are less likely to file a workers' comp claim with their employer.
Yeah, I mean, that's a good point. I would think that bringing that up to the carrier may reduce some premium, absolutely, because they see that you're taking an additional measure to cover them. So I would absolutely think that would help. Yes.
Well, even if it doesn't reduce the premium, the fact if it reduces the workers' comp claims,
Correct.
that would be enough.
Right, submitting them elsewhere, right.
Year.
And ultimately, when you're not submitting claims, your premium's going down as well.
Right. Okay, thank you.
Right, sure.
And Dan, I'm going to add to your comment. It's Nick Schultz here from Heller Kowitz. Some carriers will look at that because I know exactly what you're talking about. Some carriers won't have that as peace of mind and will still want to keep it, but it definitely helps for the claims process. If you have that conversation as you're going through the process, it definitely can help it. I've seen it both ways, just to give you some insight. So it's kind of on a case-by-case basis.
Okay, thank you. That's interesting.
Any other questions come through? Don't be shy. Send out a chat.
What about ransomware that we've heard a lot about in recent years?
Ransomware?
Yes, where there's blackmail if some bad actor shuts down the computer system and says, we will unlock it if you pay us this amount of money, and hospitals and school systems and that sort of thing gets trapped. Has that been solved, or is that still a problem?
It's 100% a problem, but it helps if you have a cyber liability policy. For sure. So ransomware is one of the #1 claims within a cyber liability policy.
Okay, thank you.
Sure.
Speaking of which,
Yes.
oh, go ahead, David.
Oh, you're on mute, David.
Yeah, I'll go ahead and ask you to unmute. Those mobile phone Zoom buttons are pretty tiny. There we go.
How's that? On the cybersecurity side, if you don't maintain any computer systems on your own, but you rely on a point of sale vendor or, email through Gmail and things of that sort. Is that coverage really necessary or helpful?
So you mean like if something is handled like in the cloud or something like that?
Yeah, like we don't have any servers that anybody could necessarily do anything to. Everything is done through third-party services, um, in the cloud.
So if that third party, if something happens with that third party and it affects you, that's where that policy would come into effect.
But even though we have no control over what might or might not happen to that third party.
Correct. You don't have any control over it, but if something happens with a third party and then it affects your system, it could potentially be a claim and you could subrogate it to them. If you would need to, set up a different computer system or something like that, you could, have an insurance claim and subrogate it to the third party. Or if they find that something that you did has caused a attack or a ransomware, if you get an email and you click on a wrong link, no matter if it's a third party or not, it's your business that made the whatever hack or ransomware occur.
Yeah, but if a payroll service, for example, was hacked and we couldn't do payroll,
Right.
the remedy of that is that maybe we would have to write individual checks for people or something of that sort, but the claim itself wouldn't necessarily have any damages except inconvenience. And
Correct. So if there's no
time.
financial harm, then typically there's not much of a claim, right? So it's just an inconvenience. with
Jamie,
something like
this is Dan again.
Mhm.
Another example, if a business accepts credit card payments,
that. Mhm.
whether it's on their own system or they contract it out, if there's theft or fraud that happens, then the business still has responsibility for the exposure, right?
100%. Yep. And that can be included not only in a cyber policy, but can be included in a crime policy as well.
Great
Just to-
conversation.
And Dan and Dave, and just to add for everybody, just so it's the easiest way to carve the path. When something does happen in the business, we tell every single one of our clients, the first call you should make is to us and is to Jamie and the team, so that we can understand exactly how it's going to affect you, not just short term or the financial cost now, but how you're going to be marketable in the future and how much it's going to affect you. So instead of just making the claim like, oh my gosh, I have this happen, I got to get, it's a couple $1,000s. You really want to talk and call your broker, call somebody like Jamie, which is why we do what we do. We're the first call to help you navigate that, to help you through the process, to understand what the long-term effect's going to be and what the short term is as well. So that's the part of it. We need to know your policies. The broker should know it better than you do. And we're going to be the one to help you through the process. It's a lot of things to dive into when you have 50 pages plus of a policy to try to figure out what comes first, how to go about it. And
Yeah,
that's the entire point here, is having the relationship. So Jamie's team's amazing. If anybody needs anything, feel free to reach out to her. But appreciate it. Thank you guys for being here.
Yeah, just to piggyback on Nick's point and making us the first point of contact is that the carriers have emergency response when it comes to things like that with cyber and what to do, and people that specialize in that, and forensics, and who to contact, attorneys, things of that sort, even when it comes to like your reputation. So it really is, we contact the carrier and then they will give us all the expertise we need to facilitate.
How about terrorism insurance or riders, whatever they're calling it these days?
On like a property insurance?
I think I've seen them on other things like liability, but I'm not positive of that. It pops up from time to time as, do you want to include terrorism
Want to
coverage?
include it or not? Yeah, so it depends on your business, depends on location, if you feel like that's essential. I will say that my prior life, I worked in DC quite a bit, so that terrorism insurance was accepted quite a bit, but there's a lot like what type of business you're doing, where you're located, is it really a risk?
But you sort of look at a circumstance and can give
Some
information if
insight,
you think,
correct, on whether we should
Right.
accept or decline that coverage, correct?
right.